Having seen the four main stakeholders and understood what their roles are in this industry, I think the next part of this module should cover and will cover the law that governs the credit bureau industry in this country. The first section is a definition section which defines various words, phrases that are used in the Act. Now, whilst we are not going to go into each definition here, there are two definitions which are very important and we should understand them right up front. The first is, what is a credit institution? All credit institutions have to be members of all bureaus. As you know, in India, there are 4 bureaus, and all the institutions send their data to all of the 4 bureaus. The second definition, which is very important, is what is a specified user. The reason specified users is important is because these are the institutions and the organizations that can actually access data from any of the 4 bureaus. As an aside, reciprocity is important, and globally and in India, you only are allowed to be a user provided you are a provider of data, with exceptions. Now, that exception is the difference between a specified user and a credit institution. Not every specified user, by their law, is allowed to share data, but under SICRA, they are allowed to use data from the bureaus by pulling reports or scores or any other product that the bureaus are offering. An example is the telecom companies and the insurance companies. They are regulated by their respective regulator, which is either TRAI or IRDA. And therefore, they are governed by the laws of those acts in terms of sharing or making public any private data of their customers. Because of that, they are not allowed to provide data to the bureaus. However, the Act SICRA itself allows them to access reports from the bureaus. Now, a strange fact, a piece of information, is that the first bureau in India, the Credit Information Bureau India Limited, otherwise at that time called CIBIL and now called TransUnion CIBIL, was actually started before this Act came into play. When this Act came into play, the registration and the licensing of the bureau was one of the first elements that it addressed. So every entity that wanted to be a credit information bureau had to apply for a license to the RBI. The RBI, in its wisdom, would then review the application and all the other details and decide who would get a license. In that dispensation, the Reserve Bank of India issued 4 licenses. The first to the Credit Information Bureau India Limited, which was already existing, and the remaining 3 to the other 3 bureaus that exist in India. That is Equifax, Experian, and CRIF Highmark. Now, the Reserve Bank of India, in its authority, is allowed or is permitted to reject applications, and individuals or companies whose applications are rejected also have the option to appeal against that rejection. Having said that, a little bit of anecdotal information. When the window to apply for licenses was opened by the Reserve Bank of India, it received almost 40 applications. Many of them were rejected outright, and many of them after review, and that's how we now have these 4 bureaus in India. The Reserve Bank of India, under this very Act, also has the right to cancel a registration. Now, there are 4 broad reasons under Section 6 of the Act which allows the Reserve Bank of India or gives the Reserve Bank of India the authority to cancel registrations. These 4 reasons are: of course, as in every other case, there is always the option of appealing against the cancellation of the registration, and the Act specifies what needs to be done to appeal against that and how that particular matter will get disposed. The second part of this Act that we have to know is the capital requirements for setting up a bureau. The authorized capital of any bureau licensed by the Reserve Bank of India under this Act has to be a minimum of 30 crore rupees. The Reserve Bank of India is permitted to increase that from time to time, but not beyond 50 crores. The issued capital has to be 20 crores and the paid up has to be at least 75% of the issued capital, which means it has to be at least 15 crores if the issued capital is 20 crores. Let's now talk about the next part of this Act, which is the management of these credit information companies that are licensed by the Reserve Bank of India. The law very clearly says that the management is the responsibility of the Board of Directors and requires at least one of these Board of Directors to be appointed as a part-time or a whole-time chairman of the board. If he is a whole-time chairman, then his responsibility is to make sure that the company runs as is required by law and otherwise. However, if there is a part-time chairman, then another director should be appointed as the managing director, whose responsibility is to ensure that the work goes as required. If the RBI at any point of time feels that there is a need for it to intervene because the business of the credit bureau is detrimental to either public policy or to lending or to customers, then the Act also provides or allows the Reserve Bank of India to supersede the board and appoint an administrator. Now, we need not go into the specific details, but it is enough to know that RBI has that authority. The administrator then has the authority to work and do what is required to be done to correct the problem that was there and to make sure that the bureau runs as was originally envisaged, both in business and in law. The Reserve Bank also under the Act has powers to give directions to the credit bureau. Those directions might be given in public interest, in fiscal and economic interest, the interest of the lenders, or the interest of the borrowers like you and me. These include what they should do to address certain aspects of their work, to address certain aspects of the credit information industry. Equally, the Reserve Bank of India has the authority to withdraw any instructions it might have given from time to time to a particular credit bureau. The Act also authorizes the Reserve Bank of India at any time to inspect any particular aspect of a bureau's business and operations. The books of accounts, the technology, the security, the privacy, and all these elements that actually impact the smooth running of the industry. We're now going to talk about the role of the auditor of the Credit Information Bureau. The role of the auditor is very clearly what they are supposed to do under the Companies Act and any other accounting standards that are required. In addition, the law very clearly says that the auditor is required to ensure that the Bureau has reported to the Reserve Bank of India and any other authority whatever data, information, returns have been filed and if they have been filed on time and accurately. Now, if the Reserve Bank of India feels that there is a need for whatever reason to do a special audit or a special check on a particular bureau, then the Act enables them to appoint either a separate special auditor or ask the existing auditor to go into that particular concern that they may have. This auditor then has to file a response and a reply explaining what they checked and what they found specific to the requirements of the Reserve Bank of India. We now come to that part of the Act which is probably one of the most important from an operations perspective. What are the functions of a Credit Information Bureau? There are a whole series of them and these are what they are. In addition, the regulations provide that the Bureau can also do the following activities. Every credit institution has to be a member of the credit bureaus. When the Act was passed, The requirement was to become a member of at least one bureau. However, subsequently, the Reserve Bank of India has issued regulations which says that every credit institution has to provide data, and that is therefore to become a member of all the four bureaus that exist in our country. Any new credit institution formed within a period of 3 months has to apply for and become member of all the four bureaus and start providing information. A credit institution cannot be denied membership by any of the bureaus. Also, the credit bureaus themselves can be members of each other if they wish to under the Act. However, as of now, that has not happened and the four bureaus work independently. An important component of the operations of a credit bureau is the collection and sharing of information. The Act specifies that the bureaus can provide a format to the lenders and by virtue of giving those formats require the lenders to submit data to them on a periodic basis. Now, historically, the periodicity was probably 1 month, sometimes even 3 months. But over time, that period has come down. The immediateness and the current validity of the data becomes that much more relevant. Now, having collected the data, there are responsibilities in terms of the sharing of the data. And the Act again very clearly specifies under what situation can a credit bureau share data with the specified users and any other user that might be specified by the Reserve Bank of India from time to time. The next section of the Act we're going to talk about are the principles of privacy and the principles under which data is collected, the principles under which it is collated and put together, the principles under which it is stored, the way it is managed, and how it is provided back to the lending institutions. There are very strict principles about this because it is all about privacy. It's about the information of individuals which is confidential. It is the information of companies and any borrower which need not be shared unless specifically authorized under this Act. Now, one important component which comes up very often is what if the data that is inside the bureau which has been provided is wrong or needs to be changed. Needs to be changed because your address has changed. Needs to be changed because maybe your name has changed. Or actually the data is wrong. Invariably, people feel that it is the bureau that has given wrong data. The fact actually is that the bureau doesn't give wrong data. The bureau has been provided with wrong data, and that data has been put together in the form of an output, which is the report, and you see the wrong output. Therefore, there are very strict laws about alteration of data by a credit bureau. And the simple answer is that a credit bureau cannot alter data. They are only holders of data provided by the lending institution. So, for example, you as an individual or as a company feel or see that your data is wrong or incomplete. Going to the bureau is a possibility, but all that the bureau will do is they will refer your query or your complaint or your dispute to the original lender who provided that data, either incomplete or incorrect. Alternatively, you also have a choice of going to the original lending institution itself where you took the loan or the credit from, and that data was provided by them. It's possible that the data was erroneously provided by the lending institution to the bureau, or you yourself, when you applied for the loan, had provided either incomplete or an erroneous piece of information. In either of these cases, the bureau will refer the case or you refer the case to the lender. The lender then will check the records and will either update in the next update that it sends to the Credit Information Bureau. Alternatively, it will continue to maintain that that data in fact is correct and there is no need for a change. There are also rules in terms of the time that you can allow this dispute, if I can call it that, to stay unresolved. So the law very clearly says that within 30 days, the dispute must be resolved either way, either by correcting the data or by ascertaining that the data in fact originally was correct. The bureaus are also required to flag a dispute pending its resolution, so that a lender who looks at a report can know that this particular element of the report has been disputed and is under work in progress as he is reading the report. There are very strict laws also about unauthorized use of data, whether it's within the bureau, whether it is by the lender or by any other entity that has access to this data in an unauthorized manner. The Act then provides for penalties for any offences committed either by the bureau or by the lender. The bureau can make errors or can commit frauds by sharing data which is not allowed to be shared, or not maintaining the basic principles of privacy, secrecy, confidentiality, and enabling technology to ensure that these principles are followed. From a lender's perspective, when it pulls information about you by virtue of a score or a report, it is also required to maintain privacy and confidentiality, and therefore they too could abuse this requirement, and therefore there is a provision for penalizing both the lender, the bureau, or any authorized person or any unauthorized person who has access to the data. Again, we are not going into the details of that, but the penalty can either be a financial penalty or it can also lead to a civil case resulting finally in imprisonment. Now, while these offences and penalties can be frightening or disturbing or cause concern amongst the people who are potentially the targets of these offences, the law also provides that any act done by an individual in good faith is protected from these offences and penalties. The Act also anticipates the charging of fees and the limits that might be charged by a bureau to a lender or to an individual for using the bureau's services. These fees are specified by the Reserve Bank of India from time to time. This ends the section on the Act itself. However, as we've mentioned right through this module, the central government can promulgate certain rules which apply to the Act. Similarly, the Reserve Bank of India can pass certain regulations which also apply to the Act. And we will now discuss what elements are applicable from a rules perspective and from a regulations perspective. We are now going to look at the rules and regulations and broadly what they cover. Remember, the rules are promulgated by the central government. The regulations can be specified by the Reserve Bank of India. Let's now briefly talk about the rules that govern the Credit Information Companies Act. These were passed or made by the Government of India as a consequence to the main Act, the SICRA Act. They have never been changed to date, and whilst they don't affect the day-to-day working, it is important for you as a person trying to understand the law, what broad topics are covered under this particular set of rules. And these rules cover the following. The Credit Information Companies Regulations Act of 2006 is made by the Reserve Bank of India. It gives the Reserve Bank of India the authority and the responsibility to make whatever changes or additions that it feels is required for the operating of the credit bureaus in India. These regulations are referred to in the main Act. Whenever there is a reference to regulations in the main Act, then there has to be an equivalent explanation or a content in the regulations themselves. For example, a specified user. For example, the maximum amount of fees that can be charged. For example, the formats in which data will be collected. And these are just a few examples, but it is important to understand that the authority is with the Reserve Bank of India as against the rules which is with the central government, because the Reserve Bank of India on a day-to-day basis from a regular operational or working of the bureaus can make whatever changes or additions it feels are necessary. Again, we are not going to discuss each element here because they have already been discussed in the Act itself. But the main topics that are covered under the regulation are: